Right now, every major player in finance is fixated on a single launchpad. The SpaceX IPO is being positioned as the most anticipated market event of the decade. For the first time, the walls are coming down. Brokerage platforms are actively dismantling the old barriers, providing regular retail investors with unprecedented access to these initial shares. This is fueled by what analysts call the Musk premium. It's a unique market gravity where any company tied to Elon Musk attracts a massive wave of enthusiasm from people who believe in his long-term vision. That belief creates an immediate explosion in demand. Between the social media volume and the nonstop media coverage, the name recognition alone is enough to spike the price before the first trade even clears. Everyone is rushing to get through the front door, but the sheer intensity of that crowd is blinding millions of people to a massive robotic system operating entirely out of sight. There is a persistent myth that getting early access to a massive IPO is a guaranteed win. The logic is simple: get in first and wait for the pop. This chart tracks the actual performance of high-profile retail access IPOs over their first 12 months. The data suggests the pop is often the peak, followed by a long, painful slide. Historically, these hyped offerings lose more than 60%. We're taught that index investing is a passive strategy, a set-it-and-forget-it tool for the long haul. But that is a fundamental misunderstanding of how these funds operate. Every index is governed by a strict algorithmic set of rules. These rules dictate exactly which companies are allowed in, based on rigid metrics like market cap and public shares available. The algorithm has no opinion on the mission. If SpaceX hits the required numbers, the rules trigger an automatic, mandatory purchase of billions in stock. This injection of capital isn't based on human conviction or excitement. It is the result of absolute, robotic compliance with the index's internal programming. Here is the part very few people noticed. Behind the scenes, major index providers have been quietly changing their rules specifically for this event. Nasdaq and Russell have both updated their systems. They've cleared a faster path for giant companies to bypass the usual waiting periods, allowing them to join the index almost immediately after the IPO. But Standard & Poor's, the gatekeeper of the S&P 500, has refused to budge. They are keeping their conservative, slow entry rules exactly as they were. This creates a bizarre split in the market. While some funds are being forced to buy SpaceX as quickly as possible, others are legally barred from owning it for months or even years. This divergence creates a massive performance gap between different funds. One group of investors will be exposed to SpaceX's early volatility, while others won't hold a single share, all because of the invisible rules governing their portfolios. SpaceX is a generational achievement. Its technology and its dominance in the launch industry are undeniable facts of modern engineering. But you have to separate the quality of a company from the quality of an investment. Even the greatest business on Earth is a poor investment if you pay a massive premium driven by extreme hype. Fighting to buy at the front door almost guarantees you are overpaying. Meanwhile, the back door, the index, waits for the math to settle. These index rules aren't just for Wall Street. They are the gears inside your retirement accounts and your broad market ETFs. If you own standard market index funds, you will likely own a piece of SpaceX eventually, without doing anything at all. Waiting for these automatic updates ensures you take a position that is rationally sized relative to the rest of the market. It protects you from the early overexposure that ruins so many retail accounts. In the middle of a massive hype cycle, true financial discipline is often found in silence. Long-term investing rewards patience over excitement. Sometimes doing absolutely nothing is the smartest way to play the biggest IPO in history.